Look around you. You see record stock market highs, a housing market defying gravity, and promises from every central banker that inflation is transitory. They want you to believe the system is stable. They are lying. What if the global economy isn't facing a downturn, but a systemic, cyclical collapse, a financial extinction event so profound that it follows the same predictable pattern as the fall of Rome and the death of the Weimar Republic? This isn't theory. This is history. We have reached the end of the long-term debt cycle, the moment where the custodians of our currency, the central banks, have only one choice left: monetary suicide. Today we expose the 8 warning signs currently flashing red across the global financial system. We are going to reveal the 3 historical patterns that converge right now, pointing directly to a catastrophic currency shift between 2025 and 2028. This is why you need to understand the greatest threat to your wealth is not recession. It's the final, desperate stage of a failing empire. Let's begin with the blueprint, the Roman Empire. The pattern is clear, and it begins not with a battle, but with a simple trick: debasement. The 3 stages of Roman monetary collapse. Stage 1, the soft devaluation. Nero, 64 AD. The empire needed funds for the military and public works, instead of raising taxes. Politically impossible, Emperor Nero simply reduced the silver content of the denarius from 95% to 90%. The common person barely noticed. It was a stealth tax, a transfer of wealth from the population to the state. Stage 2, reckless escalation. Caracalla, 215 AD. As the debt grew and the military needed endless appeasement, emperors became reckless. The Antoninianos coin was introduced, supposedly worth 2 denarii, but containing only 1.5 times the silver. It was mandatory to accept it, but everyone knew it was fraud. Stage 3, currency rejection. Crisis of the 3rd century. By the end, the denarius was less than 5% silver. Merchants rejected it. Soldiers demanded payment in gold or land. The sophisticated Roman economy reverted to barter. The currency hadn't been defeated. It had been rejected by its own users. Here's the pattern for the USA. Our monetary debasement didn't use silver, but the printing press. Since 1971, when President Nixon severed the dollar's final link to gold, the path of the Federal Reserve has mirrored the Roman emperors. The $35 trillion national debt is the modern Roman military bill. What they are not telling you is that quantitative easing, QE, and zero interest rate policies are simply monetary debasement under a complicated academic name. The math doesn't change. Creating trillions from thin air destroys the currency's intrinsic value. The Romans took centuries. The Weimar Republic showed how quickly it can happen in the modern industrial age. This is the velocity shock pattern. The official narrative blames reparations. The hidden truth? It was the velocity of money and the instantaneous loss of public confidence. In 1921, inflation was high but manageable. By 1923, it was hyperinflation. Why the sudden leap? Because the population realized the government's printing could never stop. People started spending money the instant they received it, before the price changed tomorrow. The stages of velocity shock. Stage 1, institutional capitulation. The central bank is politically captured, guaranteeing unlimited money printing to fund government deficits. This happened post-2020 in the USA. Stage 2, the credibility collapse. The public loses faith in the future value of the currency. They stop investing in bonds and start buying hard assets, anything from real estate to canned food. Stage 3, the velocity spike. Money moves so fast it becomes meaningless. The value of the currency dies in a matter of months, not years. The exchange rate for the US dollar against the German mark went from 4.2 to the dollar in 1914 to 4.2 trillion marks to the dollar by November 1923. What they are not telling you is that the same dynamic is being set up in the US. Current high inflation is merely the prelude. The true crisis will be driven by the loss of faith when the market realizes the Federal Reserve cannot and will not stop printing to service the unpayable debt. This loss of faith is the Weimar trigger. The final, most dangerous pattern is the rejection of the currency globally. This is the Zimbabwe scenario applied to the global reserve currency. Zimbabwe demonstrated the terminal stage where the government tries to solve a debt and spending crisis by adding more zeros to the paper. The lesson is simple. Currency stability is not guaranteed by military strength. It is guaranteed by credibility. The USA is unique because the dollar is the global reserve currency. This provides an immense unfair privilege, allowing us to export our inflation and finance our deficits. But this privilege is now the primary target. The stages of reserve status decline. Stage 1. The geopolitical pivot. Major trading partners like the BRICS nations, Brazil, Russia, India, China, South Africa, actively seek non-dollar trade mechanisms. This is happening right now, accelerated by sanctions. Stage 2. Treasury dump. Foreign central banks, holding trillions in US debt, treasuries, begin systematic long-term liquidation. They are selling. Stage 3. The transaction block. Oil and major commodities are traded in non-dollar currencies. The petrodollar death blow. Once the world stops needing dollars for trade, the $35 trillion debt must be absorbed by the domestic US economy alone. This is the moment hyperinflation becomes inevitable. The math doesn't change. If the world rejects the dollar, the domestic supply of dollars skyrockets and its purchasing power collapses. The window for this geopolitical shift is closing rapidly, placing the final currency crisis squarely in the 2026-2028 period. You've seen the 8 warning signs. You've seen the 3 patterns of collapse. The government and the central banks have positioned the global economy for the greatest wealth transfer in history. Your survival depends on rejecting the very paper they are printing. Here is why you need to understand these actions immediately. Re-monetize with gold. Gold has maintained its purchasing power through the fall of every single one of the empires we discussed. It is the ultimate store of value. It has no counterparty risk, and central banks cannot print it. You need physical gold and silver as a necessary hedge against total currency failure. Decentralize with Bitcoin. The rise of decentralized digital assets, particularly Bitcoin, is the direct necessary reaction to central bank abuse. Bitcoin is a non-sovereign, mathematically scarce currency. It is the antithesis of the reckless central bank system. For the first time in history, we have a way to opt out of the debt cycle entirely. Eliminate leverage. Get out of debt. In a hyperinflationary environment, you want assets, not liabilities. Do not be caught holding large quantities of rapidly depreciating cash or unhedged paper assets. The illusion of stability is shattered. We are in the final stage. The transition away from the dollar is not a forecast. It is a verifiable historical certainty. The history books are being written right now, and the actions you take in the next 18 months will determine whether you are a victim of this collapse or a survivor. We believe that knowledge is the only true defense against institutional deception. If you found this analysis crucial, do not stay uninformed. This channel exists to expose the truth that the financial elite hide from you. Subscribe to HistoFund now. Turn on notifications. Because the warning is over. The time for action is now. The end of the dollar is not a prophecy. It is a predictable cycle. Are you ready?